All right, good morning, everyone, and happy International Women's Day. Welcome to our 7th annual International Women's Day panel here at Finca Impact Finance. I'm going to turn it over to Zar Wardak, who is our Vice President of Business and Customer Experience here at Finca, to kick us off. Zar, please go ahead.
Thank you, Michael. Welcome, everyone. It's so great to see this kind of turnout. Amazing to see all of you guys again in one of these events. This is the 7th time that Finca is hosting a panel discussions on International Women's Day. We have had some fantastic conversations that have actually motivated the development of more informal financial services for women around the world. And given the experiences and the knowledge of the speakers that I see on the panel today and that you will be hearing from shortly, I'm expecting that today will be no different. Finca's commitment to building financial health of women extends back decades. We have hundreds and thousands of women that are benefiting from culturally appropriate access to products that we have designed for them. And most importantly, we are giving women the tools and the education necessary for them to be able to make a meaningful use of those products and the services that we are providing for them. In some countries, we are very proud to say that we have raised expectations in the financial sectors about financial inclusion for women. And this was not a conversation a few years back in those sectors. But we know that we still have a long way to go in order for us to create gender equity. In the past couple of years in particular, the pandemic has set back women's financial health considerably. Women took on a disproportionate share of household work in their homes, while women-led businesses were more likely to shut down and less likely for them to be able to take advantage of the assistance programs that were available to them in a lot of cases, because a lot of these women were holding businesses in informal sectors that did not allow them to really benefit from a lot of those assistance that were provided to other businesses. 2 years into the pandemic, we want to take stock of the state of the gender disparities in microfinance services, and for us to explore ways to build resilience for women, and in particular women entrepreneurs and institutions like ours that are serving those women. For the next hour, Finca Impact Finance President and CEO, Andrée Simon, will moderate a panel with 5 experts in microfinance and financial health. For the first 35 minutes, she will be asking questions of the panelists. You will then have an opportunity to ask your own questions of the panelists, and at that time, they may also react to each other's comments or the questions that have been asked of other panelists as well. At the end of the hour, we will ask everyone who wants to continue this conversation to stay on the call. If you want to drop off after an hour, that's okay too. The remaining participants will then be led into smaller groups randomly, which will have a panelist or a moderator as part of those groups. And we will dive deeper into the conversations that we held in the large group conversations. And also, just as a reminder that later on today at 1 p.m. Eastern time, women working or women that have professional interest in microfinance will have an opportunity to connect virtually for an informal working conversation. You can bring your lunch or just bring yourself to the session. This requires a separate sign up, and I'm pretty sure Mike is dropping the link in the chat box for that. So with that, I would love to turn it over to Andrée to introduce our panelists.
Thank you, Zar.
Andrée?
Can you hear me?
Yes.
Good. So I feel March 8th is always a special day, celebrating International Women's Day, has been something that we have really enjoyed doing as a team, as an organization. And I just feel so grateful that I am part of this broader community of amazing experts. You guys are so lucky to hear from this panel today, who have demonstrated over many years their commitment to financial inclusion, but also to gender equality. The topic today being resilience. This is something that we have been talking about in our conversations with each other for the last several years of how do we create a more resilient system and give people more power so that they can withstand these shocks. And so it's a real pleasure to be able to invite you into this conversation that we have been having over the last several years. So I'm going to start off with Greta Bull. Greta, I think for all of you who are on the phone probably know, is an extraordinary woman. She is presently at the Gates Foundation, where she's overseeing a portfolio of investments in gender data and evidence, women's economic collectives, and livelihoods development for poor women. But before joining the Gates Foundation, she was at the World Bank Group for 15 years, and most recently served as the CEO of CGAP, which is, I hope, a think tank that's familiar to all of you, that focuses on financial services for the poor, and has really led a lot of the sector's thinking. So Greta, welcome.
Thank you. It's great to be here. I'm really excited for this conversation.
Thank you. So start us off, set the landscape for us a little bit. Why should we, in the midst of everything that's going on right now, continue to care about financial inclusion, specifically for women? Can you give us that 10,000-foot view?
Sure. I sort of had a bunch of things wrapped into a question that you guys sent me originally. So I'm going to unpack that and try to tackle it in 3 different steps. So one is just, why should we care about financial inclusion of women, particularly post-pandemic? Second, what's the role of microfinance in contributing to women's financial inclusion, and more broadly, and I think more importantly, to women's economic empowerment? And then really a question about how MFIs need to adapt to the digital world that has really been accelerated as a result of the pandemic. As Zar mentioned in her opening comments, I don't think I need to go into too much detail about how women have been disproportionately affected by the pandemic. All the evidence we have shows that women's labor force participation was hit more heavily than men's, and it has yet to recover to the same level as men. And that's as true here as it is in emerging markets. Women had to pick up the slack on childcare when economies shut down. I read something from CGD this morning that said that women spent 3 times more extra time on childcare during the pandemic than men, and that women's businesses have seen more severe impacts from the pandemic, largely because of women's predominance in the service sector, but also because women had to take a step back and look after children. So women's enterprises have actually been slower to bounce back. So the adverse impact of the pandemic on women is quite clear. So let me get to point 1, which is, why should we care about the financial inclusion of women? And I think it speaks, at least initially, to your point about resilience. So during the crisis, it was really clear that having access to an account was a lifeline for many people. They were able to draw on savings or social safety net payments to get through the worst days of lockdown. And a lot of MFIs moved to kind of digital means to help with social distancing. And that really wouldn't have happened without access to accounts. But I think as we are all kind of shifting gears mentally and thinking about moving into the rebuilding phase, access to financial services is also really important to that growth story, but in a different way. It goes without saying that women are at least half of the population, sometimes more. So if we want to see strong economic growth, simple math tells us it won't be as robust if half of our population is sitting on the bench. And to be part of that solution, women need access to financial services. And I would also argue to the digital economy. So we need to make sure that women have access to both financial services and smartphones and data, because the shift, not only, have we seen incredible disruption as a result of the pandemic, but one of maybe the positive results of that disruption has been a shift to the digital economy that's really been accelerated by the pandemic. And smartphone ownership is increasingly table stakes to participate in the digital economy. So, I think we've made progress on all of this, but as we know, the gender gap remains for access to financial services. And I think Leora is going to talk a little bit about that later. And even if we had complete parity in access, we know that the access is shallow. So just because somebody has an M-Pesa account or an account in a state-owned bank in India, doesn't mean that women are functionally financially included. And, let's not even get into the financial health issues. People need access to more than just payments. They need a safe place to save. They need to get credit for different purposes, productive, housing, consumer, and they need access to insurance mechanisms to protect major assets from health to high value productive assets. So while digital players have taken us a long way in the last 15 years on access, we still don't have anywhere near the depth or breadth of services available to low-income segments, and particularly women. We have pieces of it in some markets. So for example, in Kenya, you can get an M-Pesa account, you can basically save on that account, and you can have access to a consumer loan. But that leaves quite a few other services on the sidelines, and the cost of these products is really expensive. You can't build a business sustainably on consumer credit that is priced at 100% plus APR a year, for example. And that brings me to point two. That's where I think the role of microfinance institutions really comes in. We've all focused a lot on digital providers in the last 10 years or so, but, MFIs, I think, play a really important role in this ecosystem. You guys provide not only credit, but often savings services for those at the bottom end of the income spectrum. And I think increasingly, you're incorporating many aspects of payments into the product offer, which I think is important. And I think importantly, these services are generally provided on affordable terms with longer tenors that are available than with digital consumer products from the purely digital lenders. And then I think beyond that, there are some intangible services like training, confidence building, and wider support that can lead to better financial health. So there's broadly a good offering there, but I don't think it's enough. Microfinance institutions aren't able to offer the full range of products that poor people really need. So if you think about your financial services needs, at the core is a savings or a current account where you send and receive payments. I think we've done a good job on that. But if you own a house, you probably have a mortgage. If you own a car, you have insurance on that car. If you run a business, you almost certainly have an overdraft, and you may have an investment loan. So, we have a whole suite of financial services at our fingertips, and poor people need those financial services to do the same things as we expect them to do. So I think we need to think about having that broad array of financial products available for poor people. And I think, financial services providers need to think about how we get to that point. It's not easy, but I think we have to get there. So that's where point three, digital, comes in. And I promise I'm going to wrap up in a sec. We aren't going to get to that without digital, but digital isn't a panacea either. So I think if you look at what the purely digital providers are doing and what the more traditional financial services providers are doing, we're giving people some of what they need, but I think we need to see greater convergence between the two models. So I think there's learning that the digital players can do from the microfinance sector and vice versa, right? So on the digital side, onboarding, I think, can still be pretty complicated and intimidating. Low-income customers on feature phones really have a pretty terrible user experience, and products are narrow and costs are high. That said, MFIs haven't cracked that code either. There's a limited product offering that doesn't differentiate well between people who would do well with an individual loan versus a group loan. The industry is not very good at risk-based pricing, so you can't give customers better terms if they perform well, which helps in retaining them and growing with their businesses. And you kind of also have a mixed, let's call it, user experience, especially for those who don't necessarily have time to join groups, and not so much of the digital sort of tools that other financial services providers are offering. So I think, both of the models have some work to do to meet the needs of low-income people. And I think there are a couple of things that need to happen here. First of all, MFIs need to up their game on digital, without a doubt. Digital players are not yet encroaching on your territory as much as they could, but they eventually will, and you're likely to lose your best customers to them. We're starting to see this happen in markets like India, where there's good market infrastructure in place. And I'm not suggesting you should go out and try to be like M-Pesa and start building market infrastructure. That's beyond your financial and your technical capabilities. But you do need to make your own operations more digital so that you can make them more efficient and offer better value to your customers. That means streamlining and digitizing back office functions, harnessing data so you know more about your customers and can offer them better terms and conditions if they perform well, and improving the user experience for those who wish to move to a more individual relationship with your institution. And once you have that better data, you can contemplate providing a wider range of services to meet customers' needs. But then you need to improve your risk management capabilities, because longer tenors at better rates requires much better underwriting and treasury management capabilities. But if you want to be really meaningful to those customers, I think you need to start thinking about something that looks a bit more like a digital bank. You can still be high tech and high touch, but if you don't incorporate some of those digital elements into your business models, I think it's going to be really tough to stay with your best customers as they grow. And maybe just one last point for the microfinance sector, and it speaks to the resilience point that you raised earlier, Andrée. Microfinance institutions, especially in Africa, need to get bigger. Not only can you offer more reach and a wider range of services to your customers when you are bigger, but you're also in a far better position to lower the cost of your products to borrowers and to be able to ride out the kind of crisis we've all just lived through. Smaller, weaker institutions have really struggled to keep their heads above water in the last 2 years. So you need to acquire customers and keep them, growing with them where possible and deepening your relationship with your best customers. And it's not easy for most MFIs to do this right now because of pretty basic credit models and not enough tech in the business model. So for me, the promise of digital is making it possible to deliver low-cost banking models that can work for microfinance segments. Bottom line, I think there's a pretty fundamental transformation that needs to take place in the microfinance sector, especially in Africa. We really need to see the emergence of bigger, more sophisticated institutions like we have seen in parts of Latin America and South Asia. I'm going to stop for now and hand it back to you.
Thank you, Greta. That was awesome. And look, I think you clearly pointed the discussion in this direction of, how does digitization create resilience or not? And what are some of the barriers that we need to explicitly address in that as we move forward in order to get those benefits to those end users that we want to serve more effectively. So that was a fantastic introduction. And you put forward what I think is the best first quote of the day, which is smartphone ownership is table stakes to participate in the global economy. And I think that we'll come back to that particular point of one of the access barriers, particularly for women, being around whether or not they have and can effectively use smartphones. So that was fantastic. Thank you. So over to another powerhouse woman, Mamie Kalonda. Mamie, for those of you who don't know, is the CEO of Finca's DRC operations. It's the largest microfinance institution in the Democratic Republic of Congo with almost 500,000 clients. She has 20 years of experience developing and growing microfinance institutions across the continent. And we would love to hear from you, Mamie, going from kind of the broader challenge that Greta just issued to us. Can you help us to understand what financial inclusion really means in the life of the average woman in DRC? How has COVID impacted her? And can you help us to put a face to the story that we're talking about?
Thanks, Andrée. So I will try to do my best and put the face to the story on how microfinance looks like in Africa. I don't know if Michael will help me to share the screen or should I do it? Yeah. Thank you, Bob. So, so this is what, when we talk about microfinance, we see our ladies having money. So in the next slide, we have ideas on the next slide. We have the ideas on this is how it looks like. This is our targeted customers. This is the women that we served every day. Every morning, their app actually in DRC at 5 a.m. You will find the market as busy as you are seeing there. And those women, they are there up, happy to do their business. Sometime when you are there at 5 a.m., some they are even dancing, singing when doing their business. This is how they look like. And in the next slide, you'll see that they are so active, these women, that on the 2nd of February 2022, it happened an incident in the market, one of the markets in Kinshasa. It was 6 a.m. And out of the 26 people that passed on, only 2 were men. All the remaining, they were women. In the market, selling, as you have just seen on the image, the exact image of the women selling in the morning. And the electricity, I think it was the electricity cable that somehow it was raining. And with that cable, with the electricity, they couldn't sustain. So 26 people died, and 24 of them were women. So this is how you can see the markets. So the market is there. Unemployment rate is very high in DRC, and the business, the economy is really run by those female. And our population, the DRC, 50% of the population is not only young, but also it is mostly women that are really driving the business in the country. So when we talk about financial inclusion, if you don't put those women in the market that we are serving, it is difficult for us to reach out the market. So in the next slide, we can see how COVID impacted on them. You know, before entering the market, someone has to ask you to wash your hands. You know, in the morning, they used to be free, go there, do their business, but they had to wash their hands. They had to wear on mask, and they were complaining, as we can see that lady, you know, shouting. So someone has to go out. Someone is not making our life easy. So for them, so COVID, without COVID, with COVID, we have to live. And you know, the country like DRC, for the last 8 years, we've been having issues. First of all, we have the presidential elections that many people died, and most of them, they were women. And these women, they live on day to day. If they don't go out, the family can't eat. If they don't go out, children can't go to school. If they don't go out, they can't cover the basic needs of the families. So most of the families in DRC are being handled by the women. And when during COVID, they were asked to not go to the market, they were like, no, something is wrong. You people, you don't understand us. You should go out. You should leave us, because we can't live without going to the market on daily basis. So it has, they lose hope, and they were crying on daily basis. And even we as Finca, we lost many of our borrowers, especially those low ending customers, the base of the pyramid, because for them, they live on day-to-day basis. If they don't go out to sell, that means what was there as food for as goods, it turned into food for the family. And if they eat it today, that means tomorrow there is no business anymore, and there is no food for the family. So COVID had a very huge impact, mostly on female in DRC, because as you can see, even the day of the incident, out of 26, 24 were women. So they are the ones that are handling actually the business in the DRC. And in the next slide, what the financial inclusion means to women is to give them voice, where there is no voice. Because those women in the family, just imagine if they don't have money, what will be their place in the community? The community in Africa, in DRC, whereby culturally women should shut them out. Women, they don't have place, they can't decide. But with financial inclusion, they can have a voice. Because I'm having money, I'm having my business that is helping me to grow. I'm having the business that can help my men to eat. At that time, I have a voice. So that's why I'm saying it gives a voice to those women that couldn't have any voice in the community. So it is giving the right place to the women, because at least in the community, I'm able to send my children to school. At least in the community, when my neighbor is sick, I have some money that I can give medicine, because at least I can manage some money. At least I can get access to loans. I remember in 2003 when we started Finca in DRC, I could realize how our loans could change the life of our customers. I remember in one of the group, most of them, they had 2 names. In Africa, we usually have 3 names. So after one loan cycle, the second and the third, all of them, they came. It was actually 90% of the group member. They came and they were like, you know what, Mamie, my name, I told you, Mamie, my name is Mamie Kalonda, but it is not Mamie Kalonda. Kalonda is my husband's name. My name is Mamie Kapenga. So we end up changing name of many of those women in the group, because they realized that they could have their own voice. So financial inclusion changed all in their families. Even some where the husbands were not considering the wife, because the wife every morning was asking for tea for kids, was asking for food for kids, but at a time, she was no longer asking for that money. Then the men realized there is something wrong. So instead of going back home at 8 p.m., I will go back at 7 p.m. At 7 p.m., where is my wife? And the kids, they're like, no, she's out there selling. Then he's like, okay, maybe I came too much late. Tomorrow I will get back at 5 p.m. At 5 p.m., she's there selling the bread. And the men realized that the wife has changed. And the next month, she was so proud to tell him, you know what, my husband has added money to our business. So now he's interested in the business that we are doing. This is the meaning of financial inclusion in Africa. This is the meaning of financial inclusion in culture like DRC culture, where the women do not have voice, but they get that voice when they're having that possibility to have loans, to do savings, and to handle the business, the family business and community business. In the next slide, so we put on the product for women last year. Why did we came up with this product? We realized that Finca started with women. So they were growing, and as they were growing big, the businesses in the community, because culturally the men has to take over the leads. But as the business was growing, it was like all the financial of the family is in the hands of the women. And for them to keep the community place, they were now transferring the business to the husband or either to the son. And we realized that by transferring the business instead of growing, we were losing those customers. We moved from 100% of customer base to below 50%. So we had to do something so that those women could keep the leadership of the business. So we launched this product last year on the 8th of March. And today, in the next slide, please. So today, this product has given actually, I wanted to show you the image of the women. You can see how happy they are. Today we are having, go to the next slide, yeah, it's okay. So we are having today as Finca DRC, 60% of our MB, they are women, 36% of Finca staff, they are women, 50% of our customers. We had gone back to 40%, but with the women only product, it has gone up again to 50%. So these women, they are the first that accepted FINCA. So we are doing the trainings, financial literacy. So we trained last year 7,653 women in financial inclusion. And this portfolio now, today, we are serving more than 3,500 women, and that portfolio had grown from 0 last year to over 5 million today. So they are really strong. Financial inclusion means a lot. It gives the right place to the women in the community. I think this is what the face that I can give of financial inclusion, even the impact that COVID is giving in our business when we are talking about gender. Thank you.
Thank you, Mamie. Thank you. For those of you that are watching the clock, I am the worst moderator in the entire world because we're already way behind, but this is good information. And I hope that you all will hang with us, particularly, we have some other amazing panelists that we want you to hear from, and it does all tie together. And I think, Mamie, I so appreciate, first of all, you sharing the successes, because it's important to celebrate what's going right about gender inclusion. But I think the other point that you made, which is one that everyone, I think, intellectually accepts, but we need to digest more fully, is that, resilience is also relative. And that a lot of the people that microfinance is trying to serve are people who are making very stark choices about whether they are going to eat, whether they are going to be able to buy medicine and send their kids to school. And if we don't address that, we get more instability, and we get more chaos. So Scott, I want to ask you to speak to the data, because this is a group of people that really appreciate the foundation that data establishes for making wise choices around what we need to invest in and what will have the most impact. And you have done some fantastic research across the globe on the impact of COVID on clients. Can you share a little bit of that with us, specifically with respect to Congo?
Yes, with pleasure. So we've been working closely with our colleagues in DRC to monitor at just a handful of key financial health indicators of our customers over the past several years as part of a financial inclusion project sponsored by Global Affairs Canada. We do this every year across the FINCA network using a tool we call the Mission Monitor, but we got an early start in DRC and Haiti due to the GAC funding, which means that we have data from 2019, 2020, and 2021, which very roughly corresponds to the pre-pandemic full crisis, and I won't say recovery, but perhaps aftermath is a better description of last year. So Bob, if you could put up that slide. Thank you. So I'm just going to talk to this one slide. It'll be pretty quick. Anyway, as I say, this sample, because we had support from GAC, we were also able to sample incoming as well as repeat customers, which allows us to kind of see the future, as it were, in the profile of our incoming customers, and also get a glimpse of what's happening to those who stay with FINCA. And one thing we found across the board is that all customers, both men and women, and incoming as well as returning customers, all of them suffered an increase in what we would call financial struggling. Of course, this is no surprise whatsoever, given Mamie's very powerful description of day-to-day life. But just what, in kind of measurable terms, what that boils down to was, increased difficulty in managing their routine expenses, difficulty in setting money aside, and generally whatever money they did set aside was not enough to cover their emergency expenses. But we also saw some really interesting contrasts between incoming and returning customers and between men and women. So at the beginning of the pandemic, our incoming male customers were slightly better off than incoming female customers, at least in terms of their savings reserves. But then COVID made things worse for everyone and kind of leveled out the gender differences a bit. Among incoming customers, almost all of the indicators of struggling continued to increase in 2021, both for men and women. So the aftermath period, we definitely can't talk about a recovery in any sense, at least for these customers. But the story for the returning clients is somewhat different. First, we did see the same increase in financial struggling among men, but not quite to the same level of men, the incoming male customers. And now in 2021, our returning male customers are kind of in a holding pattern after COVID. But among the returning women, we actually do see signs of some recovery, even if they aren't back to pre-pandemic levels. And I wouldn't go so far as to attribute this directly to Finca, but I would say that for the women who we do manage to retain, it seems evident that there is a segment of them that are actually adapting better in the aftermath of COVID than their peers. They're still worse off than they were before COVID, but they are better off than other cohorts.
Awesome. Thank you, Scott. So I realize I neglected to introduce Scott, and you guys do need to know who he is, because he does fantastic research. He has spent 8 years leading microfinance operations in the Finca family before he moved into research, but has really been spearheading Finca International's efforts to analyze, and has been a crucial partner for Finca Impact Finance in really analyzing what's happening to our clients and how we can do better. So thank you, Scott.
Thank you, Andrée.
Yeah, so I want to actually pivot to Leora, and then maybe come back to Mamie to reflect on the Congo data. But Leora, she's a lead economist at the World Bank. She has spent her career, doing analysis of economic inclusion, and she is presently the leader, as you all probably know, of the Global Findex database, the architect of that, and also the author of the most recent World Development Report 2022 for the World Bank, and is incredibly focused on helping to understand the impact of COVID on global financial inclusion, but also the impact of digital financial services. And so, Leora, maybe you can take us from the spotlight of Congo back up to the global level and help us understand, what is the data showing on how financial inclusion for women has changed over the last several years? And if you could specifically talk a little bit about, the point that Greta was making about digital financial inclusion, what's really moving ahead and why, and what are the worry beads that you think we should be concerned about addressing?
Thank you. Do you see my screen? Okay. So thank you for that nice introduction and for the opportunity to join this great panel today. So this is a photo I took of a woman in Côte d'Ivoire piloting the Global Findex questionnaire right before the pandemic. And she told us that she had 2 sewing machines for herself and for 1 employee, and she really wanted to buy another machine to increase her revenue. But she didn't have an account, she didn't have any savings or access to any credit. And unfortunately, her story is very similar to many women around the world. And so this is old 2017 Findex data showing the gender gap in account ownership between men and women, which has been stuck at 9 percentage points since we started collecting the data in 2011. And so even though in 2017, India slashed their gender gap from over 20 percentage points to 6, there was an increase in the gender gap in many countries, often driven by the adoption of mobile money accounts by men, but women being left behind. As Greta and others have mentioned, women not having access to the technology in the first place, or to agents, or the capability or confidence to use these accounts for themselves, was really holding women back. And so I will say that new Findex 2021 data that we're currently receiving, we're very excited, we'll be launching on June 28th, suggests perhaps that although early adopters of technology-enabled mobile money accounts, agent-supported bank accounts were men, maybe we're starting to see women and poorer adults catching up with this lag. And so this is a very exciting finding that we hope we'll see more consistently in the new data. And so for the past year, we've been trying to really understand and measure the impact of COVID on digital payment adoption. So it seems inevitable that the pandemic would trigger a surge in digital payments. So people, incorrectly thought that cash would spread the virus, and they very correctly sought to maintain social physical distancing while shopping or receiving their wages or government transfer payments. And so these are two of the forces that might have encouraged early adoption, especially by women entrepreneurs. I apologize, I hope you can see this. For example, as we discussed, Andrée mentioned in this year's World Development Report, Finance for an Equitable Recovery, governments responded to the pandemic with unprecedented government cash support programs to both households and also in many countries, to small businesses, even to informal businesses. And so the World Bank here has documented that at least 155 programs in 58 countries use digital payments, often for the first time. And so before they paid in cash, and they moved to making electronic digital payments. And so as shown here in that first bar, about 46% of account-based transfers went directly into the hands, or rather the accounts of women. And so many of these women were previously unbanked, or in the case of a large number of women in India, which admittedly I think drives a lot of the large numbers, had previously unused JDY accounts. So either these were new accounts or women using their accounts for the first time. And it means a lot of women received a payment from the government or from an employer or buyer or customer for the first time during the pandemic. And so one of the most striking examples of COVID-era digital payment adoption was the abrupt shift I mentioned earlier from merchant payments being mainly in cash to more electronic forms. So indeed, new Findex data that we collect in 2020, this is already publicly available on our website, shows that in Latin America, we also have data for Eastern Europe and Central Asia, but in Latin America, about 50 million adults took up or made their first in-store digital payment during the pandemic. And so this could potentially expand access to accounts by women shopkeepers, food vendors, and seamstresses. And now the challenge is designing the right products to encourage businesses to use their accounts to store money over the month, save for capital investments. Another interesting feature, which I'd love to do some research on, is during the pandemic, historical credit histories, how reliably people repaid their credit in the past, became less reliable predictors of future repayments, of future unexpected shutdowns. And so many lenders moved towards more contextual and embedded lending. For example, linking loan repayments directly, in many cases automatically, to supply chain payments or customers' digital in-store or online payments. And since women are less likely to have credit histories in their own name, the development of these new tools that use alternative credit histories may disproportionately benefit women. And so, of course, algorithmic lending also carries risks of structural biases. There's an opportunity, and we have some examples of actually using these models to explicitly bias it towards women, to leverage women's greater digital footprint during the pandemic, potentially expand responsible borrowing. And so let me end with a sneak preview of some new Findex 2021 data for a large unnamed country. And this highlights why women getting connected to the formal financial sector is so critically important. So I'm really excited what we can learn from a new series of Findex questions that we asked on financial resilience. So we've always asked this question: if you had a family emergency, could you come up with 5% of GDP in the next 30 days? And I've piloted this question in over 20 countries. I often ask women, how would you come up? Could you come up with the money? Yes. And I ask, what would be your source of funding? And she says savings. And I say, well, where do you keep your savings? And she said, I keep it in the cupboard, or I keep it in a box under my bed. And I say, how likely is it that the money would be there when you need it? Oh, very unlikely. It can be stolen, borrowed by family members. Similarly, women and men say to me, oh, I'll work more jobs if my son got sick. I said, well, how likely is it you could find more work? Oh, very unlikely. And so this question of how dependable, how reliable are these sources of funding that we've been basing a lot of information on, I really need more information. So in 2021, we added a new question after people report their source of funding: how difficult would it be for you to come up with the money? And what we show here is for most people in some countries, it would be very difficult, right? And so let's focus it, like honing in on the second and third bars. So these are people who say they would depend on family and friends, or depend on work. So looking at women, for example, most women, majority of women who say they would ask their brother or their father, or they would try to work more, say it's really difficult or very difficult for them to actually come up with that money. And so I hope this figure and the data that we'll be publishing in June, it will help move the conversation a little bit from our conversation on financial well-being. That's important for women to have a plan for a source of emergency funding, but we also need to focus on helping women borrow and save and get payments in safer, more dependable ways. For example, ensuring that women can get money from their family living in another part of the country, outside the country, and safer, more more quickly and more affordably into an account, through digital channels. The women can keep their savings in a safe place outside their home, and that they can access affordable and responsible sources of credit. And so that's why this panel today is so important. Digital payments are important to help women build relationships and credit histories with formal financial institutions, help improve the possibility that women have access to emergency financing when they need it, whether to borrow from an emergency or for an opportunity to invest in their business or in their education. So thank you, and look forward to the rest of the time.
Thank you so much, Leora. That was great. And I think that, the information that you shared really helped to highlight, first of all, that, obviously the impact has been outsized, but you said one thing in particular around the fact that we can use the algorithms and we can use the technology to actually specifically bias some of the opportunities toward women. There's not a lot of that happening in the space, but it certainly creates a lot of potential. And if we're threading the needle of this conversation from, how do we make sure that access remains? How do we bridge between the traditional model of microfinance to this convergence that Greta was talking about of digitization, but digitization in a way that offers a full complement of financial services? And then how do we use that technology as we move ahead, not just to get people to buy more stuff, but actually to make better choices about the kinds of clients that we're targeting and how those clients use the services. So that was fantastic. And I cannot wait for the Findex. So Sonja, I think you can kind of put the final point, or not the final point, but a real emphasis on this question of, if we're talking about digital financial services and financial inclusion for women, what do we need to think about as practitioners as we design those? So Sonja, for those of you who haven't met her yet, leads research at Women's World Banking, an amazing organization. She previously worked at the Center for Financial Inclusion, has been a friend for a long time, and she does fantastic research on the financial sector and policy trends, but really focused on this advocacy of how do we drive women's financial inclusion. And in particular has done some great deep dives on product design. So Sonja, how can education, I think what Greta referred to as sort of add-on services besides just the financial products themselves, and product design help to drive the usage and build on that positive trend that Leora highlighted in her data, and help us to overcome some of those barriers? What do we need to keep in mind when we're assessing the needs of women in particular? And is there a trade-off in terms of the financial impact of good design versus the social impact of good design?
A lot of great questions, Andrée. And I'm like almost hesitant to come off mute because I've been so enjoying this conversation. It's been so rich today. And it's hard to know what I can contribute above what's already been shared. But just a quick introduction to Women's World Banking. If you're not familiar with us, we're a global organization that's committed to serving low-income women with financial services. We have a network of 60 financial institutions around the world who are committed to serving low-income women. But our goal is not ultimately the proliferation of financial services, but rather the economic empowerment that comes as a result. And I know from personal relationships with others here today, and also hearing the stories that we've heard today, that that's a shared goal, is this goal of women's economic empowerment, and really important to focus on this International Women's Day. So Andrée, maybe I could start answering your question by putting forward a proposition, and that is a proposition that women have unique needs. And this is actually something that's a bit controversial. You know, there's the phrase, a rising tide will raise all boats. And that if you just design good financial products, women will come and women will use them. But our research shows that women actually have unique financial needs that can be differentiated from those of men. I'll give you one example, and then I'll turn to talking about good product design that builds financial capability and also is responsive to the business case. But this example I want to share is from Indonesia. In Indonesia, women are usually financial managers of their households with the responsibility of managing day-to-day finances. So making sure the school fees are paid, making sure that food is on the table, making sure to pay rent, and they kind of keep the household going. The labor force participation gap between men and women in Indonesia is the highest in Southeast Asia. And while women have this authority over household finances, there's a big divide in women's and men's economic participation generally. And Andrée, you talked about resilience, which is really important in COVID-19 recovery. Both Greta and Leora talked about savings as a driver of resilience. And so for these women who were not connected to the formal financial system, we asked them about their informal savings. So we asked, do you save in jewelry or gold or livestock or something else? And there was a large proportion of women we talked to in Indonesia that said, yes, I save in jewelry. And I thought to myself in this research effort, I thought, oh, this is very familiar to me. I know there are a lot of places where women save in jewelry. They buy gold or jewelry and then they wear it or they keep it at home. So the follow-up question we asked these women in Indonesia was, where in your home do you keep it or do you wear your jewelry? Like, tell us what you do with it after you buy it. Oh, no, they said, we don't take it home. We go to our local jeweler shop and we bring our money and we give it to the jeweler, and we say to them, I want that piece of jewelry. And the jeweler will put that piece of jewelry aside for us in the shop so that when we need the money, we can go and sell the piece of jewelry back to him, and then we get the money back. Well, these women are creating a savings account. It's a de facto savings account done at a jewelry shop instead of at a financial institution. So we asked them why it was they did this. Why didn't they go out and get a savings account or a financial instrument in the formal financial sector from a bank, which is very accessible to them? Oh, no, I wouldn't use a bank for this because I don't want it to be money anymore. When my husband asks me, do you have any cash? I want to be able to say, no, I don't have any money. And so they wanted to save in assets. They wanted the ability to keep their money secret, but they also didn't want to be duplicitous, which I thought was really interesting in the household relationship in Indonesia. So the reason I share this is to support the proposition that women have unique financial needs. And in this context, a woman wanted privacy, she wanted security, but she also wanted to be able to be honest when she said she didn't have any money anymore. She wanted to have an asset that she didn't have to share with other people in her household. So if you put up, I just have a couple slides, and I'll just ask you to forward until the one with the graph. While you're forwarding that, I'll just say at Women's World Banking, we like to say, if you're not designing for women, you're designing for men. And we have this methodology that we call our women-centered design methodology, which recognizes women's unique needs. I'll share two examples of this. building financial capability into the actual design of the product rather than doing classroom-based financial education, and the success of these in pilots that we have. So the first example I'll share is one where I'll highlight how it's good for the woman herself. We worked with Ujjivan Small Finance Bank in India to design a very low-tech product. And that was on the right, you can see we call these savings cards. This is a card that was attached to women's loan cards. At Ujjivan Small Finance Bank, when women get a loan, they also get a savings account that's opened to come alongside of the loan that an initial deposit sits in during the duration of the loan. And women get a loan card to take home where they can check off their loan payment every month. And so we designed something that fits in with the existing familiarity with the product. We designed the savings card that you see on the right that was on cardstock and clipped with a staple to the loan card, where women could check off every month like some amount of money that they had saved in the bank. And this was a conversation every month that they had with their loan officers. And we saw a significant increase in women's participation in savings. So you can see on the left here a graph of the percent of customers with more than 2 deposits in their account. This means they've saved above and beyond the mandatory savings that they had when they received the loan in the first place. And that yellow bar in both cases is the the treatment group, those people who got the savings card. The blue bar is those people who didn't get the savings card. This is not a randomized control trial. This is comparing branches that got cards to branches that didn't get cards. But for us, this was a really nice proof point of women's increased resilience as a result of this very, very simple fix that we used designing with her needs and preferences and existing patterns in mind. If you go to the next slide, I'll share another example where we looked at sort of the business case of this kind of intervention. So with Bank of Baroda in India, we worked with women who had an account that Leora mentioned called the Jan Dhan account. It's an account that almost every household in India has, and these accounts were used to deliver payments during COVID-19. We worked with the bank towards the start of COVID-19 to say, how can we activate these accounts? How can we make sure that these accounts aren't just sitting dormant for Bank of Baroda, but can actually transition women and men into longer term customers? And so we engaged 246,000 customers. In India, the numbers are always large. So, and this was out of those people who we shared this solution with, and this was a poster that sat in the banking agent. So these are called business correspondents in India. This was a poster that sat on the wall of the business correspondent. And so a very passive way of sharing this savings proposition. 8% of women ended up making a decision to make a commitment to save more and more in their account and get to 4 deposits with some positive impacts. And so we did some calculations with the bank looking at the estimated value of the customer to the bank. And without this intervention, increasing women's savings, the value is only 540 rupees total. But we found through looking at women's activity over the course of the year that we piloted this for women and also for men who were engaging in this action that we were trying to nudge with this gamified saving solution, we saw a more than 2-fold increase in what we call the customer lifetime value of the customer to the bank. So we actually said, how long do we project that the account is going to remain not dormant? What do we expect to see in terms of activity with these women and men engaging in the solution? And what was really interesting as well was that women seemed to have higher activity, like the delta was larger for women between the value for the bank at the baseline versus with this active engagement, which I thought was really compelling. So you can take down those slides, but I think my key takeaway, and in answer to your question, Andrée, is it's really important to design for women. And it's not just important because of some corporate social responsibility, but rather because it's good for the financial institution to do so.
Yeah. Awesome, Sonja. And I really do appreciate you bringing it back to the business case. Because I think frequently organizations hesitate to make those kind of investments in specifically tailoring products to gender. And yet the data over and over and over again shows that the financial payoff of doing that can really be significant for organizations. Unlike some of the technology investments that have been made as we have figured our way through this transformation. So I know, look, we're over, but these panelists are so amazing. I'm just going to beg for the indulgence of all the participants here to let me carry on with this discussion, and then we will just have much shorter breakout groups. Scott has some interesting data that plays off of what Sonja was just talking about in terms of the impact that we can achieve through education. And the reality is that, you know, education is not inexpensive. And so we do have to figure out how we make those trade-offs, but the impact can be really significant. So Scott, if you wanted to just share a little bit of that data, that would be great.
Yeah, I think actually just to speed things along, I'll skip any slides and maybe just hit a couple of the top lines from things. And I think a lot of it really ties back directly to some of the points that Sonja was just making. And I mean, to my ears, it's certainly not controversial at all to suggest that women are a discrete customer segment. In fact, I would go further and say that, you know, we need to look beyond gender and find the subsegments within women, because and then we just published, this is a little bit of a self-promotion here, but we just published yesterday a blog post with some data from DR Congo, looking at how you were able to use a consumer survey in DR Congo to really identify the subsegments within the female clientele. And one of the important takeaways of that was that women as a women, let me say women as a category are much more influenced by certain factors in society than men are. And in particular, within our data set, okay, I'm not making a broad generalization, I'm just talking from within our survey. But we found, for example, so we used our data to build a model of consumers struggling, meaning did consumers find it easy or hard to get to the financial product that they wanted? And we found that women had reported that problem more than men. And we found that within our data that the ability to mention or name a handful of financial products was a very strong predictor of someone's ability to find the right product, which makes sense, right? I mean, awareness is the first step of the journey to financial inclusion. But when we dug even deeper, we found some really interesting contrasts in the sense that we found that education, for example, was a big influence on women's financial awareness, but not necessarily of men's financial awareness. So a woman with less than a secondary education was much more likely to struggle in her product recall compared to women with a higher level of education, whereas that same distinction didn't really matter for men. So men, by virtue of being men, were sort of able to navigate across these, these differences, these barriers in ways that women were not. So women were more constrained by their education. They were also more constrained by their location. So a woman who was in a rural area was much more disadvantaged by virtue of the fact that she's in a rural area than a man who is in a rural area. So men can get across these barriers of geography and education in ways that women are not. Women are much more bound by the circumstances of where they live and their education, I think. And just to close off, and please, I mean, I sound like I'm making very sweeping generalizations. I'm really just talking about this particular survey and this particular blog post. So don't read too much into it. But then one other point I would make that maybe is a little more generalizable is that this issue of being bound up in social, norms it is something that we really need to take into account in the product design, because we know that women, I mean, I think it was Greta that talked about the extra burden of childcare that falls on women. And we know that women spend, many hours a day more taking care of their family than the male family members. And this puts a tax on one of their most important and under-discussed resources, which is attention. Our attention, our ability to process information and make decisions is a limited resource. And so when women have their attention divided between the stresses of looking after their family, coping with all of these situations, being uneducated in a rural area, that taxes their decision-making resources. And, there is research that shows that this has an impairment effect on their decision-making. And so when we think about designing educational support and we think about, product design, we really need to take into account that, whatever we do needs to conserve cognitive resources. We need to make it easy for people to get in and out. And this is why I think Greta mentioned at the beginning, like the difficulty of onboarding through a feature phone. Anything that's fiddly and involves multiple steps and, those kinds of things are just going to be competing with a lot of other very pressing concerns that, women in particular have. And so we really need to, when we talk about education, and yes, see, I'm actually tying this back to your question. When we talk about education, we really need to think more in terms of things like, behavioral nudges and things that give kind of very relevant information in the moment that it's needed, rather than kind of whatever concept of education we all come to this by virtue of where we, of how we got where we are. So, needing to really conserve resources, compress information, make it extremely relevant in that moment, so that women in particular can take advantage of that. So that's all I will say on that.
Awesome. Thanks, Scott. Well,
sure. Thanks.
Listen, that was great. And I think that, yes, that notion of providing people with access to the information in the moment is something that we have learned a lot about in terms of financial literacy and financial education. And certainly I will say that the idea of preserving cognitive resources resonates with me. So,
exactly.
That's super, super helpful and insightful. So to our panelists and our audience, I am going to make a change to our plan because this dialogue with these amazing panelists is so good. We're not going to do the breakout groups. I want to make sure that we have time for the broader audience to ask some questions. And I know that some of our panelists do have a hard stop. So we're just going to give our panelists the opportunity to wrap us up and then open it up to Q&A. So if you can just stay here, that would be great. So Greta, I do have one last formal question, I suppose, for you. So we've walked this arc of this conversation, acknowledging that there needs to be transformation in order to drive further financial inclusion, and that has to center on improving digital access and digital offerings for women, and that the notion of a specifically designed product that meets the needs of women is not only financially viable, but achieves better impact. We have proof that this is the case. We also have proof that we have made significant progress thanks to Leora, but that clearly the opportunity is still really big. And we know that the cost of making some of these investments is also pretty significant. So it all seems promising, but Greta, is it enough? What expectations should we really have collectively as a group of people that are interested in financial inclusion of women? Can we move faster? Can we move faster in your view?
Well, boy, it's hard to kind of come in at the end after all of these great presentations and so many great insights, but maybe something that Sonja presented really sort of stuck with me. So she showed this data about how, nudges on savings really helped, increase the number of women who were saving. But if you looked at the little letters on the left-hand side of that graph, less than 2% of women were saving. So it was increasing from 0.4%, if I recall correctly, to like just under 2%. That's not great. It's great that it's increasing, but it's terrible that the rate is that low. And I think the conversation we had before that sort of speaks to the value that women perceive from saving in a financial institution versus saving in jewelry in a pawn shop. My mother-in-law recently passed away, and my husband found pound notes stashed between plates in her kitchen. So this is not, unique to emerging markets either. So, I think there is something around customer value that we really have to wrestle with. And I think it's particularly true for women where there are more barriers, as we've just been talking about. There are barriers in terms of social norms and cultural points like Mamie was speaking about. There are barriers in terms of digital onboarding, comfort with financial services, just lots and lots of barriers. So I think we have to think really hard about how we reach women. And, I was jokingly putting in the chat, women are not a segment, right? Women are half of the population. And so I think we do need to make special efforts to think about how we bring women into the financial system. And I think there's something about how we provide that value to women, and then how we sort of think about value in the institution, in the institutions themselves. And so I don't have like an easy answer on this. I do think, it's something about continuing to push on better customer experience, better products that are more suitable to women. Even in the US, we know that women tend to be very conservative in savings, right? They don't invest in the stock market as much. They tend to hold more cash. And so I think we have to understand that that's going to be probably true in emerging markets where women are going to be a little less risk averse. What I do think actually is that there's a really interesting opportunity here. So, I've moved to the Gates Foundation, and the Gates Foundation has made a really strong commitment to put women at the center of everything we do. So we have this belief that every life has equal value. It's literally written on the walls of the foundation as you walk in. But basically, no matter where in the world you are, the fact of the matter is that life is harder if you're born a girl, right? And that's true in virtually every country and community around the world. And we've sort of taken the position that the undervaluing of women and girls is at the root of literally every problem we're trying to solve. So we can't make progress on any of the most pressing global issues, from poverty to climate change to pandemics, if a majority of the world's population keeps being left behind and that talent goes untapped. So at the foundation, we are actually making it central to everything we do, and we are encouraging our partners to do the same. And so I think we have to really rethink how we think about women. I used to think about financial inclusion, all these details about access and usage and all this stuff, and then women, and it was sort of like an afterthought. Well, now it's women and financial inclusion and all that other stuff. And I think we do have to make a little bit of that switch, because I think, this industry tends to go from one sort of exciting, shiny new object to the next, and climate change is going to come along and knock all this stuff sideways, right? I think women are central to the climate change argument. I think women are central to literally every problem we're trying to solve. So I think we have to really think about how we put women in the center of what we're doing. And just to wrap up, I think the microfinance industry is actually ideally positioned to help promote the cause of women's economic empowerment. It has always been core to the industry's ethos and business model. And I think the challenge for all of you now is how you take all that excellent work forward in a post-pandemic digital first age when climate change is going to be part of the problem. And so we have to think about resilience in new and different ways. And I think it's all about putting customer value front and center, but also thinking about business value so that you're building strong, robust institutions that are resilient to the inevitable challenges that the world is going to throw our way. And so I think if you really put women at the center of what you're trying to do, that is going to give you a strong foundation for moving into this kind of digital future, maybe is what I would close with.
Excellent. Thank you, Greta.
Are we allowed to interrupt? Can I do my closing
You know, I was just going to call on you, Sonja. So yes.
I don't know if that's okay with the format, but I just want to +1 that, or like applaud, because I think that, Greta, you started going into kind of organizational culture issues and women's leadership. And Mamie mentioned at the beginning at Finca, she's so proud that 50% of staff are women. And I think that's tremendous. Greta, if I could just put you on the stand for a second. Greta shared a post on LinkedIn a few months ago when she was in a hiring process, and shared the steps that she went through to make sure that the position description was not gendered and would attract a range of people. And that kind of self-awareness for us in our organizations and with our organization culture and how we're engaging with our colleagues, I think is something worth underscoring today on International Women's Day, but with a tremendous impact on how we think about and how we do financial inclusion. So I just wanted to take a second to underscore that, because I think it's tremendously important.
So good, Sonja. Yeah, you know, I neglected every year in these 7 years I have talked about intentionality, and I missed it, but you didn't. So thank you. That is right. Intentionality is so key, and all of our actions are so important. Leora, any final words of wisdom from you before we move to Q&A?
I will also applaud Greta's comments and Sonja's follow-up. And maybe just address, Scott's statement that by virtue of being a man, somehow this gave them an edge. And that's what I think is so important to unpack, is what are these virtues? For example, we have a lot of growing evidence, I've been doing some work on learning by doing, right? That the best way, we see, like, for example, you pay women into an account, they learn to use the account themselves, they learn to avoid illicit fees. In the remittance market, we're finding women are learning to optimize exchange rates through their social networks from using it over time in effective ways. And perhaps it's that women are less than men, even without the education, more likely to be in the marketplace, to be working formally, to be following their fathers around, and learning by doing and being exposed. The women don't have that exposure to the financial world that men have. We also have to remember that within the household, budgeting is often prioritized for men. Working in Cambodia, where women are less likely to use mobile money accounts, it's more app-based, not because they don't understand how to use the app, but because, given their priority in the household, they're less likely to have a data plan that gives them the minutes. It's too heavy to use a data-intensive app. And so, I guess this comes back to the design of the financial products to meet women, perhaps with less experience, perhaps with less access to data, and design the right products. But thank you.
Thank you. And Greta, I saw your note that, thank you, Leora, that was great. And I see that Greta, you just sent us a message that you have to drop off. Thank you so much for being here today. It was awesome. You will be sorely missed in the Q&A, but really, really appreciate you making the time to help us with this conversation. It was fantastic. Bye. So I want to give our other panelists a last word and then open it up to Q&A. Scott, any final points from you?
Yeah, I think I would just end on a quick reflection about like the potential of digital as an equalizer for women's access, because, and I guess I hate to sound on a negative note, but I guess I just want to say that we really need to look at the concrete use cases that bring, that actually make women's lives easier. And that range of use cases right now is very limited, right? So almost all digital relates to payments between individuals, occasionally some payments between people and either government entities and businesses. But so much of what we think about as financial intermediation, whether it's savings or budgeting or, keeping track of their expenses, all of the other things that, could be done digitally, those just are glimmers, the barest of glimmers in the market in terms of the kinds of use cases that people are themselves are thinking about that. And we've seen that in our own survey data again and again all over the world, that the use cases for digital are still really very much about payments. And so if we want to think about, okay, how do we hitch our wagon to that engine so that we can really drive better parity and results for women, I think we really need to hone in on those particular use cases and figure out what can we do to enhance those, or to use that as an opportunity to drive better results for women, rather than trying to come up with new use cases that I think we're going to be sort of pushing onto a public that isn't necessarily ready for them. We have to really look at how people, and women in particular, are currently using these services, and what we can do to enhance them and accelerate the outcomes that we're looking for. So that would be my last comment.
Excellent, thanks, Scott.
Thanks.
Well, yeah, and I think you built on Leora's point a little bit with that additional insight into those use cases. So awesome. So last word, Mamie, it's you. You get the last word from the panel.
Thank you, Andrée. I think the last word that I can say about financial inclusion for women, what is really key, I know that we are all talking about technology, we're all talking about digitalization. Yes, it is good, but there is that touch point that is highly needed when we're talking about women financial inclusion. Even if they're having fun at home, even if you make it simple for them without touch points, that one does not really fly. So for Finca DRC, what has really helped us a lot is to create that touch point with our female customer. They need that particular attention, because always in the community there is that negative feedback. So we need to be closer to them, so that that negative feedback can be changed into a positive attitude, and also help them to take a decision to move forward. So we think at DRC we have realized that the touch point is very key. Even if it is to do some digital financial literacy training, it is key. And as we are transforming digitally, never forget that for our female, the touch point is very necessary. They want to have someone who can listen to them. They want to have someone closer who can tell them, yes, it is easy. Just step one, just step two, and you will get it done. And this is the good way of doing it. And by doing that, once we have many women getting involved in it, it will be much easier to talk about financial inclusion and to have more women, because they are actually our good customers. They are the foundation. For me, I'm looking at them as the foundation. So we are what we are as Finca because those ones trusted us before anyone. Because when we asked them to come and take $20 US loans, they trusted. And today they can get 10 times, 100 times what they used to get that particular time, because of that touch point, which is very key in financial inclusion. Thank you.
Awesome. Thank you, Mamie. So we have 6 minutes left. And we have some questions from the audience. And so I'm going to invite my panelists to jump in. First of all, thanks to the audience for participating actively in the chat. I really, really appreciate that a ton. So there's a question, and I'm sorry because I'm sifting through this on the fly, but one of them is, what can be done to improve the experiences of women facing difficulties in repayments due to the long-term effects of COVID? And I'm going to interpret that question a little bit. When we're talking about the long-term effects of COVID, we're talking about the economic impact of the lockdowns. There's actually a whole chapter in the WDR about client resilience and helping clients to navigate this. Leora, I don't mean to put you on the spot, but could I ask you to speak to that question first?
So the chapter more examines the role of debt moratoria around the world. And early evidence is suggesting that it did play an important role in helping prevent widespread bankruptcy. Although the reality is that governments can't afford to continue support payments, and it's becoming necessary to roll back those moratorias. And certainly, regardless, regulatory forbearance, which is what allows banks to actually hide their debt non-performing loan portfolios, needs to be rolled back. And so, the first step is simply for financial institutions, including MFIs, to uncover any hidden bad debt, and then certainly work with borrowers. The important focus of the report is also talks about what happens in countries that have no personal insolvency regimes, which are most countries that certainly where you're operating. It's funny, I kept pushing my colleague, well, what's the plan B? And they're like, there is no plan B. So the question is to be aware of the fact that without a formal process for individuals to get out of bad debt, we want to avoid the alternative consequences, and the importance of the financial institutions, and the importance of not having this spillover on financial institutions. So, I think the report is simply, there is no panacea to this problem, but certainly the importance of the transparency from both the sides of the borrowers and institutions understand the extent of bad debt. And second, the importance of internal workout units and other, out-of-court mediation and conciliation to help borrowers in this situation.
Yeah, thank you so much, Leora. I thought, obviously the overarching narrative of that report, what is so important is that there is no panacea, and that you have to have very careful balance between institutions and individual clients and governments to make sure that you're not tipping the equation massively one way or the other. And that certainly hit me very hard. But also, at the practical level, institutions like Finca, and I can speak to our experience, we restructured a huge portion of our loan portfolio, not just for women, but also for men, in order to try and give people as much time as possible to recover. But that notion of, doing it into perpetuity, you just can't, right? Institutions have to remain solvent, governments have to remain solvent, and clients have to remain solvent. So if we accept that there will be some failures, and I think that kind of gets to Gloria's question, then how do we make sure that those people whose businesses failed aren't permanently impacted or excluded from financial services? Because this is a one-time event that has affected everyone, right? And we have to kind of distribute the pain of that, and then help each other to recover from it as much as we possibly can. Good. Thank you. And thank you for diving into that. I will try and put the link to the report in the chat, or ask one of my colleagues to do it, because it really is worth everyone's time to pour through that. A lot of awesome data and analysis. We had another question around, and sorry, I am going back up here. So this is a question around the move to paperless digital credit access, so really digital financial services. And the point is that we have moved much more to digital financial services, but how do we make sure that those initiatives that move towards DFS are equalized? And I'm not quite sure I understand the nuance of how to ensure fair repayment policies, other than, of course, we want to make sure that digital financial services are transparent and that clients have all the information that they need. But in terms of making sure that women have continued equal access, You know, Greta highlighted it at the very beginning of our conversation. Oh, it's 12 o'clock, sorry. She said that the smartphone is the entry point for everyone into digital financial services. We know that women have less access. Any of the panelists want to take that before we close this conversation out? What can we do to make sure that women have more equal access to DFS?
I think this moment right now, this sort of disequilibrium in predictability of repayment is a really interesting moment. And Leora highlighted this, saying that COVID has made it more difficult for digital credit companies and credit providers in general to predict whether or not somebody is going to repay. Women were always less likely to have a credit score and always had a lower data trail just by nature of their access to technology and connectivity. And so I actually think that this kind of disruption in predictability, it might be a good thing, because all financial institutions are moving towards credit scores plus, like what are the range of things we could use to predict creditworthiness. And so as long as we continue to see that gap lower in terms of women's access to smartphones or internet, my hope is that those technologies will naturally be more inclusive if they're designed to be. One quick caveat is the research that Women's World Banking has done on potential for algorithmic bias. And so as we move into new forms of credit scoring, for example, what are sort of the new lines of exclusion that we're trying to design against in the way that those decisions are made?
Awesome. Thanks, Sonja. Yeah, I will tell you that that's a personal obsession of mine, is how we can take the algorithms and actually start to turn them for good, and achieve the kinds of impact and outcomes that we want to, because goodness knows those algorithms are capable of getting people to do all kinds of things. So surely they can do good things too. Listen, everybody, I have enjoyed this panel so much. I am so grateful to all of my friends who have been on with us today. Leora, thank you so much for sharing your insights. Sonja, Scott, Zar, thanks for kicking us off. I want to say, obviously, a special shout out to Mamie and Greta. Both of them had to leave, unfortunately. And to all of the amazing team members, Bob, RJ, Courtney, Michael, Cassie, for helping us to make this work on our Brady Bunch International Women's Day Zoom call. I just appreciate you guys so much. So celebrate women, not just today, but every day. And thank you all very much. Bye.